everyone, a good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain, with me Saisha Faridi, and the closing trades which is happening on the day of expiry are very volatile, but it's on the positive side because we have seen a massive move in the last 1 hour or so as far as Nifty goes, and now we are tracking a gain of over 1%. For the series, India VIX has also seen a very sharp spike. So in the last few minutes, it was up around 10% just ahead of the expiry, plus the US GDP data that we're expecting today. That too has the market a bit on the tenterhooks. What's really working for the markets today is the banking index. Axis Bank, ICICI Bank, SBI, these three counters are supporting the index to the tune of over 100 points. This despite the fact that Kotak Mahindra Bank is down almost 11%, and that's contributing almost 75 points on the downside. So these three are the candidates which are actually giving strength to the index right now. PSU banking names are also doing quite well. Apart from SBI, you also have IOB, Bank of India, UCO Bank, which are surging anywhere between 4 to 6%, making PSU banking sector the leader right now. And then other buzzers include the likes of MCX, Cochin Shipyard, Godfrey Phillips. Good amount of momentum there, but Aisha, a lot of stocks sitting at all-time high levels, 52-week high levels, and now the pace of the move that we are seeing on the Nifty is also quite commendable.
Oh yeah, absolutely. Irrespective of the fact that you've got a name like Kotak Bank drag double-digit, but that said, the rest of the market is very lively. It's almost a tug of war of sorts, not within the Nifty Bank, but within the Nifty as well, with Axis and SBI on one end, which are the top two movers on the index today, and Kotak on the other. So fortunately, because of the higher weightage that Axis SBI combined actually shares, the Nifty is doing what it's doing, sitting at the high point of the day. It's a 200-point move, no less there. ICICI Bank as well has perked up nicely. It's a good 2.25% move coming in there. You've got a Bajaj Finance holding out well, ITC, M&M, Unilever, they're all holding up well, and so is IndusInd Bank ahead of its numbers. By the way, it was a positive step set from Axis Bank, no taking away from that, and now the stock is notching up to the day's highs. LTI Mindtree, Macrotech Developers, you had an Indian Hotels, they were at best in line. That's Indian Hotels as well as LTI Mindtree. Macrotech, of course, was a strong set. Negative then from Unilever, considering it's only select product categories where they see a healthy demand come by or follow through when it comes to the next quarter. Specifically in the rural region. So they are the ones which are currently in focus. Bharat Forge, that's also been a very big mover today. You've got BofA upgrading it to a buy, upping the target price to 1450. They're saying that there is no slowdown in the truck segment yet, and they have a very resilient model which does warrant a premium evaluation. So that's another stock which is holding up very, very smartly. In fact, not just that, a whole host of names. Look at AB Capital, MCX, Anisha flagged off. They're all looking extremely abuzz in trade. Dalmia Bharat, that's the other one which is in focus. Under severe pressure though, after weak Q4 numbers, margins have also come under pressure. So let me take it across to Ashesha, find out what the management had to say in the conference call.
Well, absolutely. The stock is tanking in trade today, nearly 8.5 to 9% lower on the back of weak set of results and management commentary that was also on the weaker side. First up, let's talk about results where revenues were slightly ahead of what the street was working with, but margins came in at 15.2% versus 18% expected. And as far as EBITDA per ton, that declined nearly 30% on a sequential basis to come in at about $710 per ton versus expectations of about $920 per ton. So internals were very weak on the quarter gone by, because of which the stock is declining in trade. Apart from that, management commentary was also on the weaker side. First up, let's talk about cement prices. Remember, cement prices have declined nearly 5 to 6% on a sequential basis in the fourth quarter, and the management expects cement prices to continue to decline in the first 2 quarters as well. They expect price hikes only in the second half of FY25, and that came in as a bit of a negative for the stock. As far as other commentary is concerned, they expect margins to improve because some costs that were incurred in the fourth quarter were reversible, and hence margins probably could improve in the first half of FY25. They did regain some of their lost market share in the second half of FY24. Capex spending, meanwhile, is expected to be in the range of 3,500 to 4,000 crore for FY25. And JPA acquisition, remember, it was announced a couple of quarters ago, and it is taking longer than than expected, and now the management says that it is expected to be completed in the second quarter of FY25. But all in all, results were on the weaker side. Management commentary with respect to pricing came in as a dampener, and the stock is reacting negatively on account of this.
Is tanking quite a fair bit, 9% lower at that. But Sandeep Sabharwal joins in on the show right now. Sandeep, hi, good afternoon. Good to have you on the show. Disadvantage Kotak is turning out to be advantage more so with good numbers from Axis, and the entire PSB Bank pack, Sandeep, is holding out very, very smartly. Look at SBI right now, solid 4.25% move. The smaller ones as well holding out well. What is it that you've made of this incident with Kotak, and of course numbers from Axis as well, if you've taken a look?
So Axis numbers are very strong, and I think Axis continues to be one bank which is, I would say, unfairly cheap relative to many of the other large private sector banks. It trades at valuations which are 40% cheaper than HDFC Bank as of yesterday. Today, maybe it's 35% cheaper than HDFC Bank. When on most parameters, it's doing maybe as well or better in terms of gross NPAs, net NPAs, provision coverage, return on equity across the board. So I believe Axis Bank results actually stood out, and this should be one stock which needs to get further re-rated higher. It trades at 1.8 times book, while most of the other large private sector banks are more near 2.7 to 3 times. So I think this process should continue. Public sector bank rally, tough to explain at this stage, because it's not that any loss of Kotak is going to turn out to be a benefit to the public sector bank. So I think it might be just a one-off thing.
11.25 thereabouts, Sandeep. Would you add more to Axis Bank after looking at these numbers?
Yeah, I would think so. So as per my analysis of the valuation at which the bank should trade, I would think that another 20% higher on Axis Bank over the course of the year should not be an impossible task.
We heard from Nitin Agarwal of Motilal Oswal as well when we spoke with him, saying that not only the results but the fact that the MD and CEO has actually got the extension is also something which will result in that re-rating of the stock. But apart from the banking names, Naresh, your view on the market mood right now? Very strong momentum at our hands, and of course led by largely banks. But what do you make of this? Largely an expiry related move, or move towards that all-time high level?
So for a change, we are seeing a uptick on the heavyweights and the indices, and not on the small caps. So a strong move, a little bit of expiry move to it. But the fact that you're hitting new 52-week highs and all-time highs in some of the names. So you have Axis Bank, SBI, as well as ICICI, all the three hitting new 52-week highs and all-time highs. That's clearly a very strong signal. And the next one to watch out for is if Reliance starts crossing 29.80. That gives a fillip to the whole basket of heavyweights. So the trend is very clear. Now, one could keep a stop loss at today's low and expect a ride up. Overall, the heavyweights have finally started showing momentum. So the bank's leadership is clear and they look interesting.
A very quick break. When we come back, we'll continue discussing all the buzzers in trade with Sandeep Sabharwal as well as our chartists. Back with closing trades right here on ET Now. MCX holding up 8.5% right now. There's Bharat Forge, which is strong by almost 8%. Axis Bank, like we've already been flagging off, that's enjoying the pole position on the Nifty right now. Over a 6% move. SBI going very strong. And then AB Capital as well holding out very well. A solid 6% move coming in there. Sandeep, what is it that you're making of all these announcements coming in from the Aditya Birla Group? And the stock price is pretty much reflecting all of that, be it the move in Vodafone, AB Capital, Grasim, etc.
I think the moves, I think, could be related to some sort of relief, given that Vodafone Idea has been able to raise equity. And to that extent, people believe that the pressure on the entire group will ease off, which it should. I think it could be a reflection of that. Specifically on, I think, some stocks like Aditya Birla Retail, it's more to do with the announcement of a demerger, where I think the Madura Garments division, the company which hosts that, I think that could trade at a significantly higher valuation as compared to the combined entity. So I think that's what reflected in the stock price of Aditya Birla Fashion and Retail.
Taken, just wanted to flag off the numbers coming in for ACC at the bottom of your screen. At the consolidated basis, the revenue has come in better than expectation at 5,400 crores because our expectation was close to 5,060 crores. A big beat when it comes to the profitability. The profitability on a consolidated basis has come in at 945 crores. We were working with an expectation of just 470 crores. So there's a large beat on the bottom line, and this despite the fact that the margins have been a bit soft on a quarter-on-quarter basis. The margin has come in at 15.5% as compared to over 18% last quarter, and even if you look at the expectation, the margin expectation was close to 16.4%. So slight miss on the margin, but if you look at the top line and the bottom line, it's very strong. So let's wait by and see as to what worked for the bottom line, because there might be a bit of a one-off in terms of either taxation or any other income. So we'll watch out, but overall it looks like it's a good set. But since we're on the subject of cement, Sandeep, a lot of news flow there, whether it's of course the commentary coming in from Dalmia Bharat about the pricing pressure, Orient Cement, wherein ET Now sources have told us that the AB group might be looking at picking up the promoter stake there, and then of course numbers from ACC as well. What's your view on the cement pack?
I think cement is a sector where we need to be cautious of. Valuations are pretty high and pricing pressures are very significant. Companies have been trying to increase prices for the last 8-9 months, but they've been unsuccessful. Dalmia Bharat also has indicated that they don't see a pricing recovery anytime soon. Even ACC results, I think some extraordinary must be there because margins have taken a significant beating. And margins could actually decline further going forward as the prices remain under pressure and costs have bottomed down now. So cost pressures could come in going forward. So I think it's a sector we need to avoid for the time being. As valuations correct, then we could look at it maybe a few months later.
Exceptional profit of 230 crores, and that's the reason that profitability is looking very strong. So that explains it. There's a bottom line impact of 230 crore, which is resulting in that big beat on the profitability. Margins a smidge lower, but the top line has been something which has been maintained. That's the latest on ACC, holding up comfortably in the green. But apart from ACC, as we pointed out, it's also about Orient Cement. My colleague Priyanka is joining us to talk to us about what exactly is she picking up on the sources and the deal which might be in place with the AB Group.
So what we have learned is that Aditya Birla Group is in advanced talk with Orient Cement to buy the promoter stake. Promoter holding the CK Birla Group along with some private investment vehicles owns 37.9% stake in Orient Cement. So as per the current market cap, the promoter stake could be at 1790 crore. And if the deal goes through, Aditya Birla Group will need to make an open offer. Let's understand the financials of Orient Cement and the key areas they cater to. Orient Cement manufacturing units are located in Telangana, Karnataka, Maharashtra. They have exposure in southern as well as their western belt. But they're also exploring newer markets in Northern Belt, Chhattisgarh, Uttar Pradesh, and even Madhya Pradesh. This is about their key areas, but talking about the financials, Orient Cement, which total capacity stands at about 8.5 metric ton per annum. Their EV to EBITDA basis is 7x. Orient Cement currently is executing a 2,000 crore capex for expansion, and recently they've transferred limestone mine lease in Rajasthan from Orient Paper to Self. Rajasthan mines have estimated reserve for 40 years, around about 120 million to 150 million tons is the capacity. And Orient Cement's 1/4 energy needs to be met by renewable energy. This is about Orient Cement, but talking about the larger players, because since we understand there's a consolidation happening in the cement industry, where the smaller players are the potential merger and acquisition candidates, bigger players are continuously increasing their capacity. In fact, they have aggressive capacity expansion plans. Talking about Aditya Birla Group's combined cement capacity, which stands at 180 million tons per annum, and talking about individually for Ultratech, which sets a target of 200 million tons per annum by 2030. So big players are on an aggressive expansion plan, and smaller players are potential M&A candidates. ET Now did send queries to both Orient Cement as well as Aditya Birla Group, but they went unanswered. But if deal goes through, then an open offer is likely to come.
Okay, that's all the buzz that we're picking up on Orient Cement, and cement has been quite that sector where a lot of M&A seems to be at place and has already been also in the past. But in the meantime, let's just take stock of what else has been happening in the market, and I want to just focus on what the laggards are up to. Unilever, of course, the results were muted, although in line with anticipation or expectations. That stock hasn't seen any improvement there. The Tata Consumer as well, down about 0.5% right now in trade. And of course, Kotak continues to be the drag. And there is no resurrection for LTI Mindtree either. Sandeep, in this kind of a market, would you give FMCG a skip right now? Because so far from the managements, there doesn't seem to be any clarity that there is any across-the-board recovery in rural demand taking place.
Yeah, I think, but that's the reason why most of them are at 3 to 4 year lows or some even lower than that. So I'm actually looking at opportunities to add to this sector now, waiting for some better price levels in HUL. So HUL, I think, could be interesting, another 8 to 10% down, because at that price, it will be trading at multi-year low valuations. And we need to realize, Aisha, that this is one sector where valuations always are high. And when the volume growth actually kicks in and the companies start reporting good numbers, the prices could be much higher. So we have to buy them when the news flow is negative. So I'm looking at the sector, looking to buy some stocks here, but not yet buying.
Kunal, do you see that 8 to 10% fall in HUL coming anytime soon?
Well, not as of now. It doesn't look like on the charts. In fact, I believe that the indicators, most of the indicators are actually oversold for HUL. And then when I look at the other, related, stocks from the related space, the likes of Britannia, Nestle, Colgate, of course, is trading at a fresh breakout for itself at a multi-month high. But I think many of the other stocks are also showing signs of a very similar kind of a bottom formation. So I would probably believe that it could be actually a very good time for medium-term traders who have a time frame of say 6 months, 1 year plus, to try and chip into these kind of stocks, because when these bottom formation patterns happen and when these defensive names get into an oversold territory, which is very rare, it's like once in 3 years, 4 years kind of a phenomena. They may spend some time over here in this lower in the price trends, but then when these stocks start to move apart, they come back to their previous multi-year highs and start off a major multi-year uptrend. So I think it's a very good time to try and chip into these names.
Okay, point taken. But Kunal, I wanted to flag out some of these all stocks which are sitting at all-time high levels, whether it's MCX, which is up 8% at all-time high level, whether it is the likes of Eicher Motors, which have been having a good run for the last few days, or the likes of Cochin Shipyard, Garden Reach, which have been doing quite well throughout the week. If you had to take one bet within these names, which chart gives you the confidence that it has the highest amount of upside from here on?
Do I have the option of taking another one?
UBL?
Fine.
Let me guess.
I'll take AB Capital. I think that's a stock which I'll be very bullish on, and I think it's already sitting at a multi-month, multi-quarter high. But even at 225, 228 odd levels where the stock is trading right now, I think the momentum is quite strong enough for the stock to even scale past levels of 265 to 270, possibly in the next couple of months.
Okay, so that's the take coming in on AB Capital. That's one stock that Kunal is flagging out with the kind of returns he's expecting on that name. Separately, we're watching out for what's happening to Bharat Forge as well. Great amount of momentum there after that Bank of America upgrade coming in. And the question is whether this will trickle down to the rest of the auto peers as well and the forgings companies, whether RK Forgings, etc. What would be your view, Sandeep, on that and this upgrade that we're seeing on Bharat Forge?
Bharat Forge is very well placed because of its diversified product mix now and what their initiatives they have taken in various fields, especially defense and aerospace, etc. Oil and gas is something which was subdued for them but could come back. However, I think all these brokerages coming out with results just few upgrades or downgrades just few days before results makes no sense. So I think we need to watch out for what the company says. Their longer term outlook is good, but in the near term, I think the valuations are not cheap after the kind of run up it's seen. So we also had bought this stock around 700 odd level, but we exited last time it went near 1300 and we haven't bought again. I would like to wait for valuations to be more reasonable.
Your view on the market right now has been that it's actually the global market strength which is supporting the Nifty, and the upside looks a little bit capped, and one should place higher bets on the broader markets in small and mid-cap names. Give us a list of 2-3 names, or even more than that if you wish, that one can look to buy within mid-caps right now.
Unfortunately, Aisha, what's happening is that the mid caps which are doing well and which have done well, I think the prices have gone up so much that it's tough to even buy those stocks further. So some of the stocks we hold, like for example, VA Tech WebAg, that's gone up substantially, or Voltas, or some of these companies. So I think it's tough to buy afresh. Where I think there's still value could be stocks like VIP Industries, which I think is on the verge of turnaround, and where I think returns could follow something like what happened when Lupin turned around, or something like Voltas turnaround happened, the returns which came. So I think that's something which could looks interesting for with a 1.5 year perspective. Consumer durables have been doing well, so on that, from a very conservative group, V-Guard has has given some returns in the near term, but not substantial. I think that's where, if results are decent, we could see some upside there.
Point taken. Consumer durables clearly looking interesting. Thanks so much for making time and speaking with us today, Sandeep. But in the meantime, take a look at Glenmark Life. The numbers look quite disappointing, or at least the street is reacting very negatively to that. The net profit is down 33% on a year-on-year basis, now at around 97 crores, and the revenue is also down 14% because it's coming at 530 crores. So vertical, decline is what you are seeing as far as Glenmark Life is concerned. However, on the other hand, Puravankara is one stock which has been surging, and not just today, over the last couple of days as well. Puravankara has been coming out with positive updates, and the stock has been reacting to that. Naresh, your view on these stocks, Puravankara as well as Glenmark Life, if you track either?
So Puravankara is what I track, but the problem is the stock has gone up very quickly from 200, 250 levels to almost 400 now. But the trend is still positive. What we are seeing is the small cap and the mid cap real estate stocks are one by one breaking out. So that's where one could be choosy. So one left in that pack is Suntech Realty, which has gone nowhere. Glenmark Life, I would wait. It still looks like a range bound stock. We're in 700, 730 on the downside. 860, 880 on the upside could be the band. So no major trend as of now, but a consolidation.
So waiting by and not putting your bets on Glenmark Life yet, and for now the earnings have been fairly disappointing. Let's quickly take the closing trade ideas as well, Kunal.
So I'll go with AB Capital stock which we discussed. I think that's an interesting chart shaping up even at current levels, and with I think the third or the fourth consecutive day of strong momentum.
Okay, strong momentum on that. Naresh, your picks?
So that would be PNB. The stock has come back close to the previous all-time 52-week highs. Very similar setup to what happened with the SBI and Can Bank. So this could be the next one on the breakout list.
Okay, time now to slip into a very short break, but don't go anywhere. When we come back, we'll track that 3 p.m. move on account of the monthly expiry on Nifty. Welcome back. Well, let's take a look at how the market is reacting. We are very close to that 22,600 mark and holding on to those gains. So not a big move, at least at the moment, on the Nifty. Let's pull up the Bank Nifty as well, because there was quite a bit of outperformance there given the kind of moves we have seen on Axis Bank, ICICI, SBI and the PSU banking names. That too is holding up quite well. But the other space that we are tracking is, of course, the food delivery space, because Swiggy shareholders have given the nod for the much awaited IPO, it seems, and the company is now eyeing the IPO to tune of around 10,400 crores. Let me take it across to Sharad to get a sense as to what it means for Swiggy and, more importantly, for the entire ecosystem, including Zomato.
Interesting take on Swiggy, as the shareholders' approval has been received as per reports, and also importantly this is a potential $1.2 billion IPO. Now to break it up, the offer for sale is expected to come in roughly at almost 6,600 crore rupees, and the balance 3,750 crore is expected to be the fresh capital which would be coming in. Also, Swiggy aims to have a pre-IPO round as well of almost 750 crore rupees from anchor investors. Now let's look at the investors who are already on the cap table, and the big names include Prosus, SoftBank, Elevation Capital, Tencent, Qatar Investment Authority, and even GIC. Now, recently Swiggy has been in focus, especially because of the valuation upgrade which has taken place. Recently, Invesco actually came out with a new valuation. This is actually the third straight hike. Now the valuation stands at almost $12.7 billion, and even Baron Capital had a fourth straight hike in the valuations, coming in at $12.1 billion. When the first round of big funding had happened, the $10.7 billion was the overall valuation when it comes to Swiggy. And now let's compare both the names, Zomato and Swiggy, and overall, as per our calculations, it's almost 12 to $13 billion. At an aggregate level, Swiggy, the market valuation is, while on the listed space, Zomato, in dollar terms, it did go up to $23 billion. It's a slight correction, and slight below, you could say $20 billion of market valuation is coming when it comes to Zomato. Now let's look at the market share. If you look at it, Zomato is having a higher share of almost 54%, while the balance remaining is 46% when it's come to the food delivery segment. So we are expecting, what the channel checks are suggesting, that there might be a kind of a hike in certain platform fee hikes, as well as certain delivery charges, as well as Swiggy gets ready for an IPO as well. So very interesting take when it comes to Zomato and Swiggy.
In fact, to chat about more on that, let me welcome on board Rahul Jain as well. Rahul, hi, afternoon. Seems like Swiggy is all set, at least got the shareholder nod for that mammoth IPO in the offing, which all of us have been waiting for. But in terms of valuation so far, whatever is in the public domain, how do you think it stacks up to Zomato? Because even Zomato valuations have quite peaked out in the last 1 year or so.
Yeah, so you're right. When it comes to valuation, we have seen there's a significant rise, and it has led for two reasons. One, of course, the way the Blinkit business has scaled up and looked like a second optionality within the for the Zomato shareholder beyond the food ordering business. And of course, the part to profitability, which they've been guiding and consistently achieving those objectives in a time frame which they've been identified. So those things have definitely worked for it. I think interesting thing from a valuation point of view and valuation equilibrium point of view would be decided once the IPO goes through, because the competitive intensity could be slightly different once the IPO happens, because the objective of achieving profitability was more important from a pre-IPO or part 2 IPO perspective. But once that happens, I think the competitive landscape may become slightly larger, from a listed post-listing perspective.
So you're saying competitive intensity is only expected to go higher from here on. But Rahul, do you anticipate a move from, let's say, Zomato to Swiggy as and when that does list? Or do you think this would be a case that this would lead to the expansion of, the entire sector and the multiples for both the companies? Or there could be a pair trade to exit from one and enter another?
Yeah, of course, whenever there is only one play in a particular sector, you get a scarcity premium, because that's the only way you play a particular opportunity. So today, if you want to play a quick commerce or you want to play food ordering, that is the only availability of option. Once you have two listed names, you have matrix, you can do comparative analysis, and you may have a certain discount or premium kind of a logic why you would ascribe a certain valuation to a company. So that is one thing, but more importantly, from a business point of view, I think the dynamics can change materially, because till the time you don't get public, you have an intention to showcase a certain way the numbers have to shape it up, because you're going to a much larger set of audience of investors. Versus when both are unlisted or both are listed.
Rahul, the story for Zomato going forward seems to be about Blinkit, right? Tell me, how does it stack up with a Swiggy Instamart? Because it seems that the competition is more fierce when it comes to that, with some of the other, unlisted players as well in fray.
Yeah, I completely agree, because in food ordering, we know that there is only two giant which likely going to dominate this space, but it's not cleared out in case of quick commerce, and you have all kind of players, right, from BB Now to Zeptos to Dunzos, and all are backed by decent investors with decent capital base. I think one key difference between the two is that Zomato by choice chose a different brand option where they run the two brands separately, don't leverage the fleet, and still it is working very efficiently for them so far. While Swiggy, on the other hand, uses the same app and leverage little bit of fleet also on both sides of the business, but yet to create the kind of a mileage in the mind of the consumer the way the Blinkit has done it. So I think this aspect of the business would also take a different shape and understanding once we see Swiggy coming up and sharing different metrics for Instamart, and people would like to see how it is stacking up against Blinkit.
Sure, thanks Rahul for joining us today. Quickly wanted to mark Laurus Labs because that's a stock which reacts quite volatile, quite wildly rather to its earnings. And for now it seems like the revenue has come in slightly ahead of what the numbers were last year at 1460 crore thereabouts in terms of the total income versus 1382 crores last year. So there's a bit of an year-on-year jump there. And even in terms of profitability, if I'm reading it right, last year the net profit after tax was close to 107 crores. This time it's coming at 75 crores. So there's a bit of a dip. We'll try and analyze those numbers in greater detail, but do keep your eye out on Laurus Labs. For now, let me take it across to Ansh to get a sense regarding the big price volume buzzers. Ansh?
Right, so Axis Bank will be the first stock in focus. As you can see in the chart as well, the stock has actually given a breakout from its downward sloping resistance trend line, which was intact for almost 5 months. The breakout was backed by a heavy volume of over 3 times its average volume of last 10 sessions. The stock has also registered its biggest single session gain in over a year. Apart from this, Jupiter Wagon will also be in focus. The stock seems to have given a good breakout from its reverse head and shoulder chart pattern with volume of over 16 times its average volume of last 10 sessions, indicating very strong participation in today's breakout. In addition to that, the stock has also touched record high level. Lastly, BHALE will be in focus as the stock has given a breakout from its rough cup and handle chart pattern with volume of over 30% of its 10 session average volume, and the stock has also been advancing for 5th consecutive session. So keep an eye on the stocks.
Okay, those are a couple of buzzers that you're currently seeing in trade. MCX, of course, right on top there with a solid 8.5% move. In fact, Kunal, we were just chatting about it yesterday, right? That what's the best way to play in on this gold spike that we're seeing, or gold rush? Is it through the financiers or names like MCX?
So finances, I think Muthoot Finance is the only stock which is more credible in terms of the trend. Manappuram is just all over the place in terms of the charts. The stock is absolutely very volatile. So I think just about last week or so, the stock was at 200 plus levels, and then the next subsequent day, in the next couple of days, the stock had fallen back towards that 180, 185 mark. So gyrations of almost 8 to 10% is what we see as a normal fluctuation for a stock like Manappuram Finance, and that's why the stock would probably take some bit of more time to try and settle into a trend. But on the other hand, Muthoot Finance I think has been a much more stable stock from 1250, 1300, which was the bottom the stock had made last month. I think it's done up quite well for itself. And now I think very close towards the previous major swing highs of 1650, 1700 odd mark for Muthoot Finance. So that's a much more better name. Even MCX I think has been doing exceptionally well. So when we look at this as a medium term or a longer term kind of a play with a time horizon of say 1 to 2 years, then I think dips like what we saw yesterday, for example, it was down some 4-5%. Those could be taken as good buying opportunities.
Okay, point taken. Laurus Labs is now tanking a bit more. It's a miss on all the consensus expectations, and that's why we are seeing that dip on Laurus Labs. But take a look at SBI sitting at all-time high level and a gain of solid 5% on that counter if I have it right. Axis Bank clearly was doing quite well, and now you have SBI also joining the party. Varun Sabu is also joining us. Varun, what's your take on SBI, Axis Bank, some of these large banking majors?
Yeah, hi, thank you, Ina, for inviting us again on this show. So we remain very constructive on the banking space, particularly Axis, SBI, etc. If you see consistently operationally, these companies have been performing quite well. Every quarter we see there's been a Q-on-Q improvement. Again, this time, the kind of numbers Axis has reported it's been phenomenal. If you see overall deposit growth has been strong. Their NIMs have expanded, which wasn't expected at all. So that is the reason why you're seeing the spike in Axis. While SBI, obviously, they have also been consistently reporting strong numbers. It's been a very reasonable stock in terms of valuations always. And something like what came into Kotak yesterday night, which we saw, that helps because there is some allocation shift which happens whenever such things happen. And the safest name is SBI, where one would go into. We remain very constructive both on SBI and Axis going forward also. And one has to keep in mind that these are not over-owned the way ICICI is. So that helps Axis and SBI further. Yeah. So we'll remain positive.
Right, okay, that's the take coming in on Axis Bank. Varun, what's the take about on Kotak though? It's been quite the, fall, 11%. Does it get anywhere close to a buy now?
See, these are times when there is some uncertainty which has come over a name which has been one of the best names in terms of governance, etc. This has been one stock which is a darling stock for the market, right? Unfortunately, there is something coming there, and that's the kind of reaction you see. Although the portfolio is small, this one, but it was the fastest growing one. Second, your online channel goes down for some time. We don't know when the resolution will happen. So there is an uncertainty around it. But yeah, one thing investors need to keep in mind that this is a great franchise built over time. So if anything, one has to think about accumulating it from here till the time there is resolution. I don't think so. Stock will move up in a hurry. But yeah, I mean, these are the times when you have to accumulate such names, sit patiently. Else, these stocks have always remained expensive. So this is a time when you're getting it cheap, and it can only happen when such events happen. I don't see it running up in a hurry, as I mentioned. But yeah, this can be a time where one should slowly start accumulating it.
Okay, start accumulating. That's at least the verdict coming in from the sell side, because that's even Nitin Agarwal of Motilal Oswal told us on Kotak Mahindra Bank, and he also believes that Axis Bank is ripe for a re-rating. Listen into that slice of the conversation.
On valuations as such is already at a attractive level when you compare it to how it has traded in the past. But the valuation premium for the bank has always been because of the high quality, very strong governance, risk management processes, and compliance, right? And with this restriction from the RBI, there has been a small question mark that has come on that until the time it gets resolved. And we have seen in the past incidences wherever a ban has come into force, it has taken at least few quarters to more than a year for it to get lifted. And which is where this uncertainty is playing heavy on the stock. Otherwise, on the valuation count, the stock was already has been undergoing a phase of derating, and valuations from where it used to be like more than 4 times book, it already came down close to 2 times. In the near term, it can recover some of the underperformance that it has had versus its other larger peers. If this profitability levels what Axis Bank has been reporting continues, and management further gets another 3 years from the RBI, then there is a case that Axis Bank will continue to re-rate in the next term.
Okay, so that's a take on the banking majors, but SBI is the other one you need to have on your radar. A solid 5% plus kind of move, taking the stock to an all-time high level, and doesn't look like it's stopping at the moment. 800 on this one. Naresh, what's the timeline you'll peg for SBI to hit the 4-digit mark now?
So when we get into such momentum, you just want to ride it out here. It could surprise on the way up because finally the stock has got momentum. So my view is this year could be the year where by end of the year we could be there.
End of the year, you're expecting the 4-digit mark on SBI. In the meantime, it is names like Godfrey Phillips, MCX India, Bharat Forge, which are gaining ground. In fact, MCX India is one candidate that my colleague Sharad flagged out in the morning as well in terms of cover as to what he was expecting and the market mood on MCX. And now he's joining in to talk to us about one more stock as part of his cover segment. What's the latest that you're picking up, Sharad, and which is the stock in focus?
In focus is Godfrey Phillips, and what we are gathering from the dealer room, the buzz is that buying is coming in from an FI desk and also certain institutional clients. Importantly, the volumes has picked up almost 6 times its 20-day average, and the stock has been seeing accumulation over the past 5 trading sessions, rising almost 15%. Importantly, the key FIs already invested in the company include Jupiter Fund. Now, there are three important triggers for the stock which the street is looking at, and there is an interest coming from conglomerates, especially for their retail division. Now, this retail division contributes roughly 10% of the total revenue, and that is what the market is looking at. Also, there has been a good response coming in for the Stellar brand, especially the smaller priced cigarette sticks as per the channel checks. And interestingly, in the third quarter of FY24, their volume growth stood at 10%, while there was a degrowth coming in when it comes to VST Industries as well as ITC. So, of course, the volume growth outlook for the March quarter would be something which everybody would be looking out for. But right now, there is an institution buying happening when it comes for Godfrey Phillips as per channel checks.
Okay, that's the take coming in. Godfrey Phillips is the one which is on everyone's radar. In the meantime, we've of course been marking out all the winners. Look at Concor as well, for instance. That's holding up a good 3.6%. 1,000 rupee per share is where the stock has scaled up to. There's Piramal Enterprises, which has seen a very good move. 3.5% of uptick coming in there as well. There's, of course, Can Bank, which is higher by about 3.5%. Apollo Tyres looking very strong. BHEL has made a strong 3% move as well. And then, of course, Alchem Laboratories, Balkrishna Industries, Adani Enterprises, REC, Sun TV, a lot of these stocks are looking very, very buoyant indeed. Naresh, specifically within the entire PSU banking pack, other than SBI, what's looking like a good long right now?
So that would be first PNB, which has been in a strong uptrend. The stock has made multiple tops around this 135 to 137 mark for the last 3 months. So if that breaks out, we open up a target towards 160 odd levels. So PNB is first. Then there is Bank of India, which has also gone through a sideways consolidation. Very tight range now, 130 to 150. This could break out above 150 going forward. So these two small names look interesting. And finally, Bank of Baroda is the next one, which is on verge of a similar breakout. So the smaller ones look interesting as well now.
Okay, point taken. So that's the view coming in on some of these big buzzers at the moment. But in the meantime, it's Indian Hotels which is taking a sizable knock at that 5% cut, and Macrotech as well. Varun, what's your view? Were the numbers really that bad for Indian Hotels as well as Macrotech, or what really explains the move?
No, so in Indian Hotels, one has to keep in mind that the stock has seen a very, very sharp up run, right? We have been hearing about travel, tourism, etc., doing exceptionally well. So this stock in this entire period has gone up to 28 times EV EBITDA, which is like the peak multiple which they had seen during the 2004-7 times, where it has now come back to. So these are peak multiples. So obviously one has to expect some correction here. It's only the opportunity that's giving you to buy it again. One has to keep in mind that the biggest spend today, which people are willing to shell out their money on, is around hotels right now. You look at the kind of pricing uptick we are seeing. I remember the times when we were not okay paying 8 to 10,000 rupees for a room. Now people are paying 25-30,000 rupees for a room. So we're going on hearing 10 to 15% kind of price rise that we are hearing in the average room rents. And that keeps on, this feedback keeps coming. So just to highlight our teams, we had about 10 people who went across some 15 states across India, and we did an on-the-ground check. And what we get to hear is that the pricing has been on a big surge, and we're going to be seeing overall across hotels a 10 to 15% further price markup. So yeah, I think we remain very optimistic on the name. We don't think it's going to give you a sharp re-rating from here, but yes, this is going to be a great compounding story from here.
Okay, that's the take coming in on Indian Hotels right now. That, of course, is taking a bit of a beating today after that solid move that the stock has seen in the past 52 weeks. In fact, we chatted with Puneet Chatwal as well. Here's what he told us about, the visibility in the numbers going forward.
We feel we are very well positioned with the number of locations, with the diversity of our top line, as well as the kind of portfolio we have divided over leisure destinations, business destinations, and more than 50 spiritual destinations. And we are at almost 14% of our top line is coming through the new businesses, and the projected short term is at 20%. But that is something the management worked upon in the last 5-6 years, is driving operating leverage in our traditional business, in our iconic assets, by by implementing and executing on effective asset management and driving margin expansion through the capital light business model. So all in all, I would say if we can maintain more than 15% of the total share of the market, which is in terms of branded supply of rooms is 180,000 rooms, less than 200,000, then we'll continue to drive growth, drive penetration, drive premium results.
Okay, numbers for Vedanta flashing for you at the bottom of the screen, but for Vedanta, the story is a lot more to do with how they're managing the debt, what happens with respect to the various restructuring which have been made there, and of course the dividend story that has played out. But separately, IT companies have managed to disappoint us so far, barring TCS, which was an okay set. Infosys as well as Wipro was a bit of a disappointment, and Tech Mahindra is the number that we're expecting today. With Tech Mahindra, we're expecting that the slide is going to continue, 1.4% cut coming in on constant currency. Dollar revenue is expected to be down by 1%, and the EBIT margin might see a bit of an improvement of 160 basis points, because last quarter there was a big exceptional that had led to a sharp drop in profitability as well. So we are expecting a sharp improvement in profitability at the moment. Deal wins are likely to be around that $600 million range. Of course, watching out for what the management has to say about the outlook, the communication vertical, any new strategy update coming in from the new CEO is something to watch out for. And Mindtree was the other one which we were watching out for. Actually, it isn't that bad a reaction versus the kind of numbers that the company has posted, because the margin decline was quite sharp for LTI Mindtree, as well as growth was a bit, subpar. But Varun, what's your take on the IT counters? The kind of disappointment that we have seen is one part, but the second part is that you're not hearing anything about any recovery even at the end of the year. Do you think the sideways move on the IT sector is just going to get a lot more elongated?
I don't think so. See, if you go by the commentary which the managements have come out and they've spoken about. So first of all, when we speak about Infy, TCS, to an extent Wipro, all of them mentioned that there's a lot of pent up which is visible in BFSI vertical for IT companies. Now, if there is pent up there, most Indian IT companies have a heavy skew towards BFSI as a vertical for them in terms of their revenues. So this is a very good time to accumulate IT because there is uncertainty in the US. There are concerns around how when the interest rate cuts are going to happen. There's been a lot of volatility in the statements which we have heard from US Fed, and that's what is keeping the IT companies under check, right? I think the opportunity is there. Stocks have corrected sharply, particularly mid-cap IT companies, because of the commentary around margins have been a little weaker. One has to read their commentary and the tone. So they have mentioned that if the current situation prevails, then they expect a bit of a delay in margin recovery going forward. So it all depends on how US interest rates will shape up. But one has to keep in mind there's sharp correction which has happened. These are great cash flow generating businesses. There's a time when you have to own them. If things start turning around, if outlook on interest starts becoming favorable, these stocks will not be available this cheap. So I think one has to accumulate these names. IT stands as one of our key sectors, top sectors from here, which we are recommending. There's a time when no one is looking at it, one must buy it.
Okay, buy IT, buy Kotak, that's the word coming in from Varun. In the meantime, let's just bring up Vedanta as well on your screens right now. The PAT, of course, has missed the street estimates by a huge margin, but that's not quite the case for the margins. They're largely in line. 24.8% is what we were anticipating. 24.7% is what they've actually clocked. And the EBITDA as well matches up with the street estimates. 35,509 on the top line is a slight bit of beat. We were anticipating about 34,100 odd crore rupees. Of course, the lower commodity prices that we were anticipating are going to weigh heavy on the quarter this time around, and higher volume in zinc is going to offset the marginally by prices and lower COP in aluminum. So let's see what the commentary really is from Vedanta, if there is any, on where they see the price trends headed for the quarter ahead. But that's that on Vedanta. It's really been a little bit of a volatile reaction coming into the numbers, given that it's such a mixed bag right now. But Kunal, just taking a leaf from Vedanta, metals has been having it very strong. You continue to like Hindustan Copper, or are there some other names as well that you're betting on now?
So there are a few more names. I think, for example, JSW Steel has given a fresh breakout, and that stock has been a huge underperformer over the last I think 6 months or so with respect to the bigger peers or the peers, from the metal names like Tata Steel, etc. That's another name which I think above the 900 mark looks very attractive. Even from a trading play, I would look out for say 975, 980 as a immediate target for JSW Steel. And SAIL is the other name which I believe looks extremely strong. The stock has given, or rather it's tested the 150 mark I think 4 or 5 times in the last 6 months or so. And finally the stock has managed to break out, and that has happened after almost 30 to 35 points of correction prior to the breakout of that 150 mark for SAIL, which means on the upside we could be looking at 185 to 200 as a potential target for the stock. So not many other names which have given a breakout, and that's why I would believe that this may not just be a very short-lived move for the entire metal names, metal counters, but this could be a more prolonged uptrend for these stocks, something which I would believe could last for at least a couple of years.
Okay, point taken. On that note, Varun, we let you go. Thanks so much for joining us today. But Naresh, what's the BTSC trade?
So that would be a buy on 2 banks. First, a buy on PNB with a stop loss at 134, target price of 140. Second, a buy on ICICI Bank with a stop loss of 1105 and a target price of 1150.
Okay, point taken. What about you, Kunal, the BTSC trade?
So I'll go with 2 buy calls on the larger cap front. Bajaj Finance is something which I would be bullish on, especially after the V-shaped recovery. Targets of 7,700, stop loss could be kept at 7,000. And IndusInd Bank could be another private sector bank which could be at a very good risk reward at current levels of 1485.90 where the stock is trading right now. So targets of 1600, stop loss at 1455.
Okay, let's begin winding up for the day then. Varun, we'll let you go on that note. Kunal, Naresh, we'll see you again with all the market action tomorrow morning. It's really not been bad at all. Given that the global handover wasn't as strong, but we've managed to close in at the session highs. 176 points higher is where the Nifty futures is ending. In fact, it's been a record-breaking series as well that we are winding today. It's been a good one really after that March shake-off within the small and mid caps. We've come out pretty strong even for the broader end of the market. Today, of course, it was a bit of a tug-of-war between Kotak Bank at one end and Axis and SBI on the other. Advantage Axis SBI put together, given their weightage, combined weightage that is, DRL, JSW Steel, Adani Enterprises, Hero MotoCorp, Nestle, ITC have all been some of the standout performers today. From within the broader end of the market as well, like we've been flagging off MCX, an over 8% move, Bharat Forge, an over 7% move, AB Capital with almost a 6% move. There have been quite a few high flyers in today's trade. But Dalmia Bharat goes home with an 8% downtick after its numbers, and Indian Hotels as well didn't quite manage to impress the street, goes home with an over 4% cut, almost 5% actually. But that's pretty much it on this edition of Closing Bell. It's a goodbye from Anisha and me. We'll see you again with the market action tomorrow morning at 8 a.m.
If you like this video, then like, share and subscribe to ET Now.